Uh, I am your moderator for today. My name is Amit Jain, and I'm the co-head and partner at IBS Intelligence. Uh, Joining me today for the webinar are three very senior people from the industry. I'm joined by Nicholas Dickmans, who is the head of EMEA Technology and Platform from Swift. I'm also joined by Andreas Gunther, who's the head of Continental Europe at Broadridge Financial Solutions, and by Hubertus Wonposa, who's a member in the management board at PPI AG. I'm looking forward to hosting you and for an insightful 60 minutes of a very interesting discussion that we have from the senior members of the panel. The format is that there will be a brief presentation followed by an interesting Q&A session or a discussion with the panel members, right? With that, I would like to start the discussion with the first poll question that we have for today. And I'll launch my poll. Which of the following is the biggest challenge for the payment industry? Is it regulations, which is managing new regulations and standards? Is it risk, which is managing payments related risks such as operational and cybersecurity risk? Is it going to be operations, which is transforming payments, operations, and systems? Or is it going to be the expectations, which is managing innovations, that is processing real-time payments, right? Uh, let's give a few more seconds to the audience. I will perhaps then request Andreas to then react to what he sees as the findings of the poll. Last 10 seconds. Okay. Andreas, what's your, if you can see the results, what's your take on the results, Andreas? It seems like a mixed bag, right?
Yeah, yeah. I think that really reflects the reality, what we have as feedback from clients. So there are a number of challenges in the payment industry, which, let's say, all the banks have to face. And as you can see, there is no clear, strong response here. So it is real-time payments, it is managing the risk of all of it, it's the new regulation that is upcoming. It's all together is quite challenging for the industry. I think this has increased over the last few years a lot. And this is, let's say, the reason, and this is, let's say, not an unexpected answer. And this is the reason why we thought it's time for such a webinar to discuss this and introduce a little bit what are our thoughts on this market, because there is no clear trend. The only clear thing is that we have to do something, we as service providers and the banking industry together. And as I said, I think that's quite a good introduction for the presentation, for 3 or 4 slides that we have prepared to setting the scene for today.
Sure. With that, I will start the presentation. Andreas.
Yeah, Hubertus, I will do it.
Yes.
Okay, thanks, Amit, for your kind introduction. So what I will do, please move to the next slide, is, as Andreas said, before we start with the discussion and the panel, to give some, at least our view, how we see the market, where we see the main challenges for the payments industry. And some of it, I think, reflects or refers to the poll we just said or saw. We have 5 points here. I think we all know one of the key challenges we currently facing and also will face for the future is regulation and market standards. So a lot of things going on there. I will have a additional or a deep dive slide on this on the next slide. So for this, let's focus on the other ones. Risk, is for sure one of the key risks we are facing in the payments industry. So, and that is two risks. One is cyber risk. For example, in Germany, just last week, one of the largest data centers for the banking industry, for the mutual banks, representing 1/3 of the market, has been attacked significantly over a complete week. And I mean, that's not the payments industry, but another industry. We all know about the incident in the US, where I think it was an oil company was attacked by on the IT side. With regards to risk, another key challenge we see is, of course, fraud, especially with instant payments now in place. Fraud represents a significant challenge because you need to do instant fraud prevention. As third challenge we see is cost pressure, especially for the banks. We are still in a low interest rate period, but also due to still significant regulation, banks need to meet all these requirements. That's a costly endeavor. So there is a high cost pressure, and in parallel to this, we see a lot of pressure coming from innovation. So digital money coming up across the world is one example. In many markets, we see pure online challenger banks, for example, getting more and more into the market keeping or more and more keeping a strong market position. And also clients, of course, last but not least, requesting for easy to use, secure, fast and efficient technology, especially. And last but not least, these challenges are all coming in an environment where most of the banks and financial service providers still at least in some areas, rely on, let me say, traditional legacy systems, so being host-based, etc., and having some challenges to meet 24/7, 365 demands, for example, when it comes to instant payments. So that's a challenge on the resource side, but also when it comes to human resources. We see that a lot of clients, for example, face some challenges because a lot of people working in the payments departments on the IT side as well on the business side will retire soon. They all have very specific skills, very good people, and not only in the payments industry, but in all industry, basically, at least in the European or Western world. It's a real challenge to replace those good resources by young people. And therefore, a lot of our clients, a lot of the banks face also significant challenges here. So please move to the next slide. I hope. Yes.
If I may add, listen, if we go back to one page, please, Ahmed, again, I think this is the slide that we, let's say, could show also in a security settlements meeting, or when you talk about trade finance. I think these 5 terms here on the slide, they are more or less valid for every kind of banking business. But Hubertus, and we show it here because I think it's now really a special time for the payments industry. I think as a bank, you always run a risk, you always regulate it, and you always think about cost pressure. But I think Hubertus will show us on the next slide why this is increasingly important, especially for the payments industry. So it is, as I said, sounds a little bit like a normal regular sales slide, but I think Hubertus will show us on the next slide really why we show this here, because it's so important for the payments industry right now.
Yeah, and yeah, thank you, Andreas. And most of the specific payments challenges come from the regulator or for standardization bodies. So instant payments is covering more and more of the business. It looks like in Europe that over the next years, the EU Commission will make instant payments mandatory. So in order to increase reachability for all participants, and as I said, this is a real challenge, especially on the infrastructure side, because you then need to meet 24/7 and 365, and that also applies to the surrounding systems, not just to the core payment system, but also to the booking system, to the embargo system, etc., etc. Then just 2 days ago, at least in the European Union, the request to pay scheme has just went live. So the point where we have this very now is very good for that. So that's just 2 days ago. And that's also representing a big challenge, because besides the core payments behind that, you also need now to implement a messaging services for handling the request to pay messages. Globally, we all know, being from the industry, that the ISO 20022 migration by SWIFT is a key challenge for all of us. It's a useful and helpful thing to do, but it remains a challenge. The period, or the migration period, will start soon, and it's affecting all banks globally. Then also, in order to meet instant payments requirements and to also increase the transparency in global payments, with SWIFT has implemented GPI, but is also enhancing that. I think Nicolas will come back to this in more detail. And then in Europe, we also have the Target 2 securities consolidation, which is not just an ISO 20022 migration project. It also affects the connectivity to the central banks. It affects the treasury processes banks have. So each of these projects I present here represents a significant project with regards to mandates. It's at least, each of them is at least some thousand mandates. So again, the way forward is challenging, and the challenges are very significant. Just to give a different view on the same thing, on the next slide, and please move forward to that. This is just to show, this is time critical. Just focusing on the high value payment space and the space for international and cross-border payments, we all see here, we are in the middle of 21, and Target 2 is already a running project, also the ISO migration, so time is of the essence here. And Andreas, anything to add from your side? You're on mute.
Yeah. So I think to sum this up, the last 2 slides, I think it is time to think about doing things differently. As you mentioned, Hubertus, legacy systems, availability of resources, cost and time to run all of these changes, projects, requirements, however you call it. We strongly believe that this requires a different model to handle this, to deal with it. Because again, if you sum up all of these 1,000 mandates you were mentioning, Hubertus, a bank has to think about, do I want to spend the money? Do I have the resources to do so? Do I find resources on the market? Is my technology ready to do this all? Instant payments, 24/7, 365 days per year. So we strongly believe that it's time to rethink the model, the operating model in our payments landscape.
Yes. So please move to the next slide. Yes, and as Andreas said, we feel, there's not just one way to address challenges. Of course, one is at least we feel banks should have a kind of a roadmap and a strategic approach. So not just operationally execute these projects, but maybe take a minute and think about what's the best way forward to meet all these challenges, especially on the IT and the infrastructure side. And besides, of course, doing it themselves or maybe buying some software, BPO is also an approach which can be very helpful, especially maybe for tier 2 and tier 3 banks, because the investments you need to make don't make any difference with regards to the size the bank has. But in BPO, and that's another point we see, what we currently see in most of the markets is an approach saying, okay, we take our infrastructure, we take our legacy systems, we take our software as it is, and then outsource it to an outsourcing provider, which is a fair approach. But we feel at least you should give some thinking to another approach, because if you just move the world as it is to an outsourcer, then you just move the challenge to somebody else. And which doesn't always mean that this is then solved. So we feel also another BPO approach is saying you connect the outsourcing with the migration to a more modern platform. Of course, you then need partners who are very experienced in migrations. That's something we see more and more in the market. Just one marketing sentence. We also offer it as a cooperation between Broadridge and PPI. But we feel that's at least something you should think about, because, as I said, then you can manage the migration, you meet the new requirements, and you migrate to a modern platform or BPO provider. Yeah, Andreas.
Yeah, thank you, Hubertus. And let's say, this thinking that we have, these challenges that are ahead of all of us, we shared our thoughts with a few banks in the European market. And as you can see on the blue left block here, for example, we are currently in a project with one of the leading banks to establish the model that we thought about. Again, the initial driver for us as a service provider to the banking industry, us as PPI and Broadridge, we thought it's time to do something. It is necessary maybe to change the models. And we thought about a kind of a new model, how to run payments. And this is what we do with this bank here, where we have some details in this left blue box. In fact, we combined the experience of PPI as consultants in the payment industry, as the leading provider of software in Europe for payments, with the strengths of Broadridge as a technology provider, as a leading BPO provider in the global banking market. And we thought it's no time to lose because of these challenges that we had in the slide before. And what we intend to do for the payments market to provide them maybe an attractive model is we combine the software, the knowledge, the consulting with the technology. Technology means we would run the software, the payment system, the payment hub, the infrastructure, and we provide also the BPO part of it, which means that our people would run on behalf of the bank the payment transactions for our clients, so that you really get a kind of a one-stop shop, more or less, to run payments. We think it's more a commodity really than something special for every bank. And having this model in mind, we were able to start this project with this bank here on the left-hand side, where we exactly established this model. The advantage for this bank really is that they will have a contract with us. They will have service level agreements. It will be our responsibility to cover all of the service levels. It will be a full coverage of the payments, but as well, we told them we will cover the future trends of the payment industry. So as we already said, we will have this target to ISO instant payment, request to pay, and it will be our service for the banks to cover this all, let's say, in one place under one contract with underlying service level agreements, more or less. And what we bring here to the field is really our expertise for PPI, as I said, one of the leading knowledge hubs in the European payments industry, combined with, let's say, the expertise that Broadridge has in hosting and especially running BPO service for big global banks on all continents. If we combine this together, I think we have quite a unique offer where two leading companies in their field combine the strengths to be able to have really a kind of a new offer to the market. And while doing this, and maybe my last sentence on the slide here, when you look to the left-hand side, we cover multi-channels. It's not just, let's say, European Central Bank for SEPA, Target 2, this kind of things. We were able to guarantee this bank significant cost savings because the infrastructure, the software is very efficient. Our people are shared resources, not just for one bank, but for a number of banks. So, and we handle already millions of payment transactions in our systems today. And as I said, now we combine the strengths of the two companies and come up with a new offer to the market.
Okay, thanks, Amit. I think so. This was the warm-up to set the scene, challenges, one possible model to address them, and so I hand it back to you.
Thanks, Hubertus, and thanks, Andreas. Right. So this is very interesting, Andreas. If I may interject here, and while we saw this interesting case that where you are delivering a piece of work for this particular bank, is that possible for you to elaborate a little bit more on the benefits that this bank is achieving out of this?
Yeah. So this bank, which is, let's say, the pilot for such a service, had exactly the problem that Hubertus mentioned in his second slide. All of these changes that are upcoming, a legacy system, staff that might be retired very soon, the number of projects where they, let's say, they knew they cannot cover it with their own internal staff. They had to use external consultants, external people. And let's say we introduced our idea, then we discussed it with the bank, and actually we were able to provide them with a solution which guarantees them to have one of the most modern payment system and platforms. Sure. Our people, Broadridge staff, will handle, let's call it, the traffic of the payments, and we guarantee them that whatever is coming up as a change in the market in the future, things we don't see, which will happen in 3, 4, 5 years, which will be driven by things like IT security, data protection, reporting requirements from authorities. So they have an SLA in place that says, we do this for you. And this company, this bank now, let's say, run this project with us. And in the end, if we are successful, and actually we will start within the next few weeks going live with this. So it's not just a project or an idea, it's reality. As I said, we will start in a few weeks with this. And I think then we will demonstrate to this bank that they just need a kind of a retained organization in case of they need to check that they are compliant with rules, regulations. They need to check that we are fulfilling our service levels. But in the end, they just have a few heads controlling our PaaS service, but having a most modern platform to be provided to their client base. Yeah.
Got it. Thank you so much, Andreas. Before I move and hand it over for a discussion amongst the panel, I want to run a second poll and I'll launch the poll. And it says the most important success factor for successful payment transformation is it a robust transformation strategy? Is it a best-in-class payment solution? Is it a modern infrastructure? Or is it the USP, right? So if let's give the audience a minute, and then perhaps I will obviously welcome again Andreas and Hubertus to react once we have the poll results published, right? Okay, again, we will give another 15-20 seconds to the people. Andreas, do you have any gut feel of what this is going to look like?
I think let's say it should be equal again, I would think, because they are all kind of drivers for what we think are market challenges in the payment industry. So
Sure.
I don't think that we have one leading answer. It should be equal between the four of them as
So
well.
let me just end the poll and let us share the results, right? I think Andreas, you were right. I think it's the best in class payment solution is standing out slightly, but it is pretty much a mixed bag again here, right? And as per what you had indicated, right? So any reactions or any takeaways on this, Andreas, or this is the reality?
I think this is really, let's say, it shows the reality. This is exactly, let's say, why we run this webinar, why we introduce this idea, and why we want to discuss it with the market, because there are these multiple requirements, and there's maybe one way to address a kind of a solution for it. Yeah.
Sure. So with this, I'll end this poll, and I'll then obviously introduce John, from Broadridge, who will now facilitate a discussion amongst the senior members. Over to you, John.
Thank you very much, Amit. Hello, everyone. I am John Lam, Marketing Manager from Broadridge Financial Solutions, and I'll be moderating this discussion section where we will hear our speakers' perspectives on future opportunities and innovation that we may see in the evolving payments industry. So let's start with Nicola. So Nicola, you've just heard about the challenges, drivers for change, and a new model for payments transformation from Hubertus and Andreas. As head of EMEA technology and platform at Swift, what is your view on technological innovation in finance?
Thanks for the question, John. I think the first thing I would like to say on the topic is that the global customer demand to be able to pay and to be paid in real time is actually the new norm. And the availability of seamless real-time experience for consumer is fueling the expectations for the same level of service and experience in the field of financial services. And we see that both in the corporate and retail sector. The growth of digital and e-commerce marketplace and the evolution of real-time payment scheme will lead to further momentum in the growth of the real-time payment. And actually, to meet these customer expectations, both the existing and the new market players are competing to offer faster, more transparent, and more streamlined payment solutions. Now, if we look at the technology side of things, we see that technologies such as APIs, artificial intelligence, the cloud computing, the quantum computing offer many opportunities for incumbents and challengers alike to transform financial services. And as such, financial institutions must accelerate, like you mentioned before, their digital transformation, combining all those technologies with the right business model to deliver a seamless experience to their own customer. Now, if we step back and look the take-up of the cloud-based solution specifically in the financial services was initially relatively slow. But we notice as well that it has grown up very fastly over the last year. However, while a wide range of institutions have developed cloud-first strategies, many of them are still struggling to get the full value of shifting their enterprise system to the cloud, as the shifts need to be accompanied by a wider digital transformation strategy within the organization. And I'm thinking out loud about things like the processes around. Now, if you ask me a bit more specifically about Swift and the cloud, I could articulate in 3 main points. The first one is that we've invested heavily in recent years to develop a brand new cloud infrastructure for the customer to connect. And that infrastructure will be the backbone of many of our products and services for the year to come. Second, our new cloud infrastructure is based on the latest containerized technology, which significantly increases the speed we can develop, test, and deploy innovative services for the benefit of our community. And last but not least, the infrastructure will form the technology foundation for the new SWIFT strategy, and as such, will act as a crucial enabler to become a transaction management platform. Did that answer your question, John?
Great, thank you, Nicolas. And yeah, so you mentioned a lot about the increasing demand for seamless, real-time payments. So I'm really keen to hear, Andreas, your thoughts on what should be the way forward for banks to address this changing consumer demand and the change in payment regulation and market standards.
Let's say, to be very, very precise here, I think let's face the reality. The banks, they all have currently the challenges of running this multiple projects on their existing platform. They need a lot of staff. They need to spend a lot of money. They have complex projects. They have maybe systems which may be a little bit old-fashioned, outdated, where they maybe need to attach new features, functions, upgrade them. In the end, they have to run a number of projects with a number of people, and they have to spend a lot of money, which means a lot of cost for internal and external resource. However, they solve it. If they use their own development heads, if they have a supplier who develops things for them. But let's say to be up to speed and with all the deadlines that we had on one of the slides during the PowerPoint presentation, you can't miss them. So it means there's a lot of pressure to run with the payment markets, yeah, with ISO, SEPA, and so on. You know that a number of things happen in parallel. You have Target 2, you have SEPA, you have ISO 20022, instant payments, request to pay. You have to do this more or less at the same time now. Yeah, and on the other side, we all know that the requirements for IT security is increasing. Is my platform, is my infrastructure, is my data center still able to cover all of the requirements? Data protection, GDPR, if you have international business, you need to cover GDPR requirements. Your lawyers are involved. A lot of things maybe needs to be reflected, not just from a legal side, but also from a process side. Process means IT and people. Are we in line with those? Can we prove that we are in line with those things? We have these additional reporting requirements from national central banks, from authorities, from the European Central Bank, and increased audit requirements. And this is now all together. It happens right now. And this is why I strongly believe that banks need to think about a different operating model. Is the model that I have my own legacy system, I use my people, I have my developers, or maybe I use a software from a third party which runs in my infrastructure, which I have to host and monitor, maybe with external people as well. I personally strongly believe that because of all these requirements and requests at the same point in time, the banking industry needs to think about a different operating model. And what we introduced on one of our slides is where I said, okay, think about having contract in place and having SLAs and using someone who has the expertise to do all of it, not just for me, but maybe for the banking industry. I think, even if I think neutral, not just as a Broadridge employee, but if I think neutral, I think this is the best possible scenario to avoid all of these headaches around how can I run this project? How can I be compliant with market requirements and with audit requirements?
Thank you, Andreas. And I'm very keen to hear Hubertus's opinion on the way forward as well.
Yeah, maybe just to add, I think what I found interesting in the last poll is that, you know, nobody said you need an USP. I would say if you have the time, the starting point should always be what's your position in the payments market? What do you want do you want to just do it, you know, standardized? Do you want to meet additional individual requirements by clients, be retail clients or corporate clients? So that's something I think, and also being a consultant, I would strongly recommend to take a minute or to take a breath and think. So what's our position? Yeah, do we see payments as a key USP for our bank, or is it not a key selling point for us? And based on that, then you need to define your strategy. Yeah, how do you operationalize it? Is it through outsourcing? Is it through I don't know, maybe even closing your payments business? I wouldn't recommend that because it's the key interface to the client. But just to add, I think that would be a good approach to do that work first, and then from there move on to the right, let me say, operational model for that. And that, as Andreas said, one strongly can be outsource things, but there's others as well.
Thank you, Berthe. So I can clearly see that, you know, from your perspective, some banks are still weighed down by legacy systems or still trying to define their payment strategies. So Nicola, I'm keen to hear on, you know, your perspective on how do you think traditional banks can be supported to take on the challenges from fintech and vice versa?
Yeah, thanks for that question, John. I think I can start to say that Swift, in a sense, is the oldest fintech, and for more than 40 years now, Swift has brought together the financial institutions of all around the world to identify industry-wise challenges and develop solutions for the benefit of our entire global financial system. And if I step back and look a bit at the results, I believe we can say they've been game-changing. So when it touches to services, to technologies, to initiatives, and I can name the GPI that you previously mentioned, the API program, the financial crime and compliance offer, we see that they've already, in a sense, transformed the industry. And I can tell you there is much more to come. Now, looking at where we sit and where we go, I think we have a pivotal role as Swift to play in helping the industry benefit from the shared solution that results in a far-reaching change. And that's why we are now transforming our platform based on the concept of transaction management. That while retaining Swift messaging system will evolve beyond today's capabilities to orchestrate fast and frictionless end-to-end transaction. That's one. Second, I think our open platform approach will allow our community and our partners to innovate with us. So by further opening up the network and encouraging our community, as well as what we call trusted third parties, to co-create new products and services with us, we're entering a new era for transaction management, efficiency, but also interoperability. Apologize. And last thing that I would like to mention to that question is that there are many other opportunities for things like artificial intelligence to help streamline processes and reduce risk, as well as dramatically improve the customer experience. And that's why we are, for the moment, building an in-house machine learning sandbox environment that will provide a highly secure hub where we can train and evolve machine learning models under, like what you mentioned before, as mandated thing, the strictest data privacy conditions.
Great. Thank you very much, Nicola. So I heard that you mentioned a lot about customer expectations as well. So as they keep evolving, Hubertus, I'm keen to hear from you. How are payment solution providers meeting these evolving customer Hubertus, I think you're on mute at the moment.
Oh, okay. Sorry, John.
Yeah.
Thanks. So before I start, maybe what we experience, what are the key customer expectations? Of course, there's always individual differences between retail clients, corporate clients, financial institutions, but in the end, it's clients want more and more to be able to do payments always, everywhere, and real time. And the end client is more and more requesting what we say to be, the payments needs to be invisible. So I always, for example, tell my people, nobody ever wakes up, at least maybe us as being experts in the morning, and says, okay, today I buy a PayPal transaction, or today I don't know, I do a Broadridge PPI transaction. You do this, you wake up and say, okay, today I buy a new shirt, but you never do that. So payments really need to be kind of invisible, efficient, always running, etc., etc. So the question, how are payment solution providers meeting these expectations? So one is they more and more are trying to go real time, and that is a challenge because real time really means real time. So it also means if you have a release, a newer release, there should be no downtime at all. So it's like Netflix. Yeah, you can tell your clients, okay, stop watching the movies. It's Saturday night, 2 o'clock. We need to do some upgrade, or some new release. So that's a challenge, but I think not all payment solution providers are meeting these requirements yet. But that's clearly one of the task. The other one is that payment solution providers increase the configurability of their solutions. So, if to meet all these challenges, if it always needs new programming, that's something that's not efficient. Yeah. So that's, I think, the second thing a lot of payment solution providers try to do, and that also not just to be efficient, but also in order to address that outsourcing, for example, always not does mean that you need to be standardized. Yeah, the challenge is to outsource and also keep being individual. Yeah, so maybe still being able to meet individual requirements by very specific client groups like the shipping industry or the that's maybe a good example. For example, this industry has very specific requirements in cross-border payments, and if you're a good payment solution provider, you can configure the needs they have in your system.
Thank you, Hubertus. So you mentioned a lot about efficiency and being able to be seamless and invisible to the customer. So I'm very keen to hear from Andreas yourself. Do you think there are any other key motivation drivers for why banks are maybe opting for payments as a service solutions?
Let's say I tried to mention it a few times. I think this payments as a service, the driver to use is a very strategic one. I think it's not, let's say, just the requirement to do instant payment or just the requirement to be able to send ISO 20022 message. I really think that the payment industry compared maybe to the security settlement industry was, for the last 20 years, not so many changes. This is why most of the banks still have legacy systems. Let's say they built something here, they built something there, they added new audit requirements, some faster payments. But the last few years has shown to the payment industry that they need to speed up. All of these competitors, they came up. Hubertus mentioned PayPal. We have Google Pay, Apple Pay, all these things that we discussed now for 3, 4, 5 years in every conference, more or less. The interesting thing is that leads to a situation that this entire payment world is changing. And the banks have to make sure that they can speed up, that they can, let's say, run with this market. This was, in my opinion, slow for a number of years, but now it speed up immediately. So many things happen. You have to make sure as a bank that you can follow this. And we had this question about unique selling points. or I also saw in the Q&A session that people are asking what needs to be done. I think the most important thing is really that you strategically think, is my bank, is my system, is my infrastructure able to follow the speed? And as I said, we named here a few of these trends like ISO or instant payments or whatever, but these are not the last trends. The more and more will come. All of these competitors are around the banks, which are not classical banks. They show the classical banking industry what needs to be done. And then you have to decide, and I come back to what Huberto said, as a bank, are you more a commercial bank? Are you a retail bank? Are you servicing a dedicated industry? Huberto's mentioned shipment, for example. Maybe you have your niche, but nevertheless, it will be usually that you do instant payment. No one will accept in a few years that you're not able to cover instant payments. Even if your corporate client maybe does not need an instant payment, it's fine if he can send his, let's say, invoice to Brazil or to any other countries in 3-4 days, sufficient, but it will be normal that you have to provide an instant payment, even for such payments where you don't have the necessity to run it instant. It will be the clear market trend. And the banks have to ask themselves, am I prepared to do so? I think if a lot of banks are honest to themselves, I think the answer would be not really. There is effort to be done. And maybe again, thinking about the model, think about an operating model which is different to what they have today. This could help, I think, a lot to let's say, cover the challenges in this industry.
Thank you, Andreas. So I see that we're nearly approaching the end of the discussion. So I'll leave everyone with one final question, hoping to get your perspectives, which is, what is the biggest challenge for a bank in modernizing their payments infrastructure? So if we can just have one short answer from, should we start with Nicola to hear your perspective?
I think the first thing you can say on that is update your processes and governance to get the right technology meeting very fastly evolving business requirements.
Great, thank you, Nicola. And Hubertus, one short answer for what is the biggest challenge for banking modernizing?
I would see two challenges. One is get the attention from senior management that payments is important, that payments is key to the client relationship. And the other one is get experienced resources, can be human resources, can be IT, but it's important to have experienced resources because payments is not simple. It's very complex.
Definitely very complex and very evolving industry. And finally, to you, Andreas, what do you think is the biggest challenge for banking modernizing their payments infrastructure?
I would say two things. One I already mentioned is think about your operating model. Does it fit to these additional requirements? And the second thing is, I would agree to what Huberto said. I think there's a big challenge of getting the investments, getting the money for changing this payment world from the bank, from senior management, because again, I mentioned it 2 minutes ago, it was, let's say, not an area where banks really spend a lot of money. It was more or less whenever there was a regulatory requirement, yes, there was some money, but maybe not to, let's say, increase the performance of a payment infrastructure. And this is, I think, a challenge for a number of people, maybe here on this webinar, to convince senior management it's time to invest in it.
Great, thank you very much, Andreas. So I see that we've moved to the end of the discussion section. So now we'll be moving on to the Q&A section. So I'll pull up a few of the questions. Just a heads up to everyone that due to time limits, we may be able to only answer a few, and then we can get back to other people later. So I see that one of the questions we had from one of our audience, Nitin, is what should be the top 3 priorities for a bank in upgrading their payment infrastructure? So I know a few of you have touched on this before, but does anyone have anything to add?
Maybe if we talk about the top 3, I would say the first priority is really make sure that you meet all the requirements that currently exist. There is no choice. There is no doubt that you have to cover this, that your payment infrastructure has to be able to send ISO 20022 messages, as an example. I think the second of the top three would be assume and let's say do kind of a forecast what's next. Because while running this project and using all of the resources that you have to cover the existing market requirements, I think it's important to monitor the market, review the market, and see what it's next, to make your planning to find out, are you able to handle this in terms of resources, maybe human beings, staff, money, whatever. And then the third thing is think about, if you have difficulties to manage 1 and 2, is my operating model the right one, or do I need to change something, or do I just try to run behind market trends, auditor requirements, and communication requirements?
Great, thank you, Andreas. Hubertus and Nicola, do you have an opinion or anything to add on to the top 3 priorities for banking upgrading their payments infrastructure?
I would mostly agree with what has been said, and highlight from there the resiliency still as a priority, because being out of operation is something with instant payment you cannot easily afford. The TCO, total customer ownership, and the flexibility it gives you for changes, but also for implementing upcoming initiatives.
Okay, thank you, Nicola.
Maybe just to add one point, make long-term decisions. So just to give an example, it can make sense, for example, if you implement ISO 20022 to implement some kind of conversion tool, but this can get very risky long term, because then you do need to install a second one for maybe the first one for target, then the second one for ISO, then when the CPA 2.0 will come, you need the third one, and your infrastructure gets more and more complex. So take long-term decisions. Sometimes it makes more sense to invest, as Andreas said, to really invest, but then you're better off for the future. Yes, so long-term approach.
Great, thank you, Hubertus. And just following on the same line of topic, we also have another question on upgrading your payments infrastructure, modernizing it. Someone has asked, is it more of an ask from the customer, or is it more of a regulatory requirement to modernize your payments infrastructure? So does anyone have an opinion on that?
Yep, I would say really it's both. Yeah, it's a regulator pushing innovation, and it's the clients. So it's both. I wouldn't say it's one of them is key. It's coming from both sides.
Yeah, I would agree. It really equals. Let's say when we look to the reality, ISO 20022, Target 2 are coming from the regulators, from central banks, simply changes that you have to perform. And then you have this competitive environment, instant payments. I already mentioned, and Hubertus mentioned, the PayPals of the world. So there's increasing pressure from both sides. And I think you can't ignore one or the other. You simply, as I said, it equals more or less. There is a lot of pressure on the payment markets. It's coming from various directions, but you can't ignore either or.
I would actually agree as well with the statements, and mentioned from there that if you look at the CBT and back offices, most of them are dated for several years already. Technology is moving fast, and on top of that, we're moving from a messaging side of things to a more transaction-based. So time for change.
Great, thank you very much. And we do see another question on the payments infrastructure requirements as well. So do these differ depending on the size of a bank? So are the requirements different for a tier 1, tier 2 bank, or how about the new age challenger banks? Do the requirements differ?
Maybe I take the first answer. I would say yes. I mean, normally, tier 1 banks, their international reach is bigger. So therefore, you need to meet all the national standards. I don't know, faster payments in the UK, instant payments on the continent, US schemes, etc. So most of the time, their business, especially in international payments and cross-border, is more complex and the volumes they process are higher. So yeah, I would see some differences and normally their budgets are higher also. Yeah.
And I would add to another thought to this. Maybe it's not just the size, tier 1, tier 2, or tier 3. I think it's also the business model. So typically, as Huberto said, a tier 1 bank covers all kinds of business, corporates, retail business, trade finance, whatever. But in the tier 2 and tier 3 world, we see more banks who are specialized on some parts of the business. And therefore, maybe they don't have the full load of these requirements because they have a more narrow business model. So again, the challenges are the same, but maybe for tier 2s and tier 3s, depending on their business model, they might have reduced complexity.
Thank you, Andreas. And Nicola, do you have a perspective on this?
I think I would put it in 3 points, which are linking with what is being said. The tier and the volume specifically is an importance in there. I would add to that the business lines in which the bank or the FI is busy, whether it's payments only, whether it's securities, whether it's Forex, whether it's trade, whether it's supply chain, whatever. And last but not least, their technology appetites. So do we have an operating model with resources in-house, or do we have an operating model and a strategy and a governance with more externalization? So I think the key factors.
Thank you, Nicola. And due to time constraints, we can take one more question. So I see a question from our audience member on what is your view on conversion of wholesale payments and retail payments through the ISO 20022 standard?
Yeah, I saw the question. I think it's an excellent question. It's a very good one. And I would strongly say yes, retail payments, corporate payments, card payments are converging. For example, one example is we see it on the clearing side. MasterCard has acquired VocaLink. So that's just an example. Yeah, we see many more in the market. So yeah, very good question. Clear, yes, it's converging. In the end, it doesn't make sense to at least in some parts, clearing is one example, to make any difference between corporate payments, retail payments, and card payments.
Great, thank you, Hubertus. Does anyone have anything to add on to that?
I cannot say anything more. I just can agree to what Huberto said. Yes, a clear yes.
Great. So it seems we are all in agreement on that question. So I see we are actually reaching the end of our webinar. So thank you so much to all of our speakers for providing such an insightful discussion. We've learned so much about the pressures that banks may be feeling, the need for efficiency, and also maybe looking into sort of outsourcing core payments platform technology and operations might be a way forward. And I would like to pass back to Amit to close the webinar.
Sure. Thanks, John. I couldn't thank the audience and more importantly, the 3 panel members, Andreas, Hubertus, and Nicholas. Thank you so much for your time and, for your insights. I think we've answered all the questions of the audience. I think there are a couple of questions that are left. I will email, we will email you guys back with our responses after seeking some insights from the panel members. Hope you guys had a, good session. All your questions were answered. And, there is something to take away home. You guys have a great day and a great weekend ahead. And, very soon the recording of the webinar will be available and we will get in touch with you shortly. Thank you so much, everybody, once again. It was a pleasure hosting.